Today is Tuesday, August the 27th, and another day of very low trading volume. The Dow was down 0.5% after popping up initially. Fears of recession again. Probably people aren't really confident that China and the US are really talking. So yesterday's exuberance was bound to catch up when the Chinese admitted that they never asked for talks to resume. NASDAQ was down, the S&P was down. The decliners led advancers 2-1, so that's the opposite of yesterday, which takes us back to, let's just refresh this, make sure we're looking at, so we came close to the zero line, now we're going to go back down again, churn. The market is indecisive. So let's take a look at the S&P, which was down 10, but it was up at one point by, let's see, it was up to almost 2,900 and hit a low down at the Woody's pivot support 1 was a bounce. There's lots of things that make stocks bounce technically or get rejected. Woody's pivots is a real good one. Ichimoku is another one. So here's an example showing where the 5-minute cloud stopped the movement of the S&P well before resistance level 1 of Woody's pivot. So that really never came in play. It was the cloud that was more important today than Woody's pivots. But I said that I thought that the market, the S&P was going to go up, then down, and then up. I thought we were just going to have this churn. But instead, we've got down today. So the prediction tomorrow would be, this line is irrelevant, right? This is just a channel. This is not accurately drawn, so the bounce off of that means nothing. There is a good chance tomorrow that we do a little bit lower. So that's my call for tomorrow, a little bit lower, because I believe there's a lack of confidence in the market, even though the consumers are still confident. The consumer reading was down a little bit, but way above what analysts or economists thought it would be. So the market was only down a little bit today, 10 points, but it could be more tomorrow. Apple, I thought would go up. I still think Apple can go up, and so I'm revising that to say that Apple's still going up. We got to bounce off the 50 here, so I think we could see something higher tomorrow. Caterpillar coming down to that gap that we've been talking about for some time now, and that I believe is exactly where we're going. And then I think we might see a bounce off the top of that gap like we did back here. Gold. I hope you've been buying gold since here, because there's that breakout, not gold, but gold miners. You could also be buying GLD. I'm sure the chart is exactly the same, but we had a repeat of this bull flag, horizontal channel, bull flag, horizontal channel, and then a pop. We could be forming another flagpole, and we could see another one of these. So let's take this and let's just put that on our chart, and let's look for one of those in the future. Whirlpool 134. I thought we'd be up down. I thought we'd turn around. Instead we were down like the S&P. Whirlpool will follow the S&P. What else did I want to say about this? I've got a new stock that I want us to take a look at, and this was posted by Trader Stewie, who is a really good trader. You should follow him on Twitter. He likes breakout patterns, and he's the one who pointed out gold in GDX, and he points out a lot of these, which for the most part do quite well. He's saying now that snap could be ready to snap. But let's take a look at why that might be so. Let's take a look at the cloud, where we looked at one day where the cloud was certainly important here and all the way here, just kept making resistance, more resistance here, and then price was able to break through the cloud, but it did so where the cloud was the thinnest. So it wasn't able to break through here where there was a lot of resistance, but it churned its way through over a period of a week and broke through, had a big gap, which February 6th, that's probably earnings, blocked by the 200, support at the 200, support at the cloud, support at the 200, support at the cloud. Now the Chiku span is right in here, and it's taking advantage of this gap that occurred on this day here, which was July 23rd. Probably not earnings. I'd have to look and see what happened, but there's a gap here. We tried to come back in and close the gap. Let's draw that gap, okay? This is the last stock I'm going to cover today, so if you're not interested in Snap, you can say goodbye. But here's the gap that we're going to look and see if it fills. Come on, baby. Take that, move that out here. So let's see if we close that gap. But we've shown how the cloud has been really important. Well, here's another one. Here's where price came down. We ended today at the 50, but you can see that price came down, and let's put our gap behind the cloud. I'm sure I'm able to put it back. Move to the back. You can see that we came down and we touched the top of the cloud and we got support. So let's wait and see. I've got an alert set for when we break out of this flag. So this is a type of flag, but pretty soon it runs the risk of falling below the flagpole. Then it's no longer a flag anymore. It's a flag that's hit the ground. Let's keep an eye on it. And if it pops out of here, I'd like to buy Snap because it would be a bull flag breakout. Let's keep an eye on it, okay? Thanks very much. See you tomorrow. I think the pain is not over yet. I haven't done anything in terms of selling or buying today. I still only have short 130 calls on Whirlpool, and they made $600 for me today, even though the stock went down. That's turning out to be a pretty good strategy, just rolling those 130 calls. But that's only 300 of the 1,100 shares that I have. Ex-dividend day, last chance to buy is Thursday. Friday, Whirlpool goes ex-dividend, and you'll lose out on the $1.20 dividend that's payable September the 19th.